At the beginning of 2025, I gave myself a goal. I gave myself a goal to achieve a 15 to 50% return by the end of the year. My goal was not necessarily to aim for certain profit targets, to aim for a certain dollar amounts. I didn't really care about that. I told myself, beat the market in percentage terms. That's all I'm aiming for. Why? Because if I'm an option trader, I know how to use a complex product to build myself a strategy that is able to outperform the market. Now I know it's only 1 year. However, I was able to achieve this goal of getting a 15 to a 50% return this week with all the volatility that we have seen. In fact, I was able to achieve a 20% return this week. Now keep in mind, the whole year since January, I've been very slightly profitable, probably like 1 or 2% break even at most. This week has provided a ton of opportunity with the volatility that we have seen in the market, and I totally understand the fear factor behind it. But as a trader, I have lived through these conditions in 2022 during this period way back here. These conditions will melt a hole in your stomach if you are not prepared and you are not managing your risk. And they melted multiple holes in mine as I was training to become better at this craft. Lost a lot of money, countless dollars. Fast forward to 2025, and we're only seeing a fraction of that currently right now, but we've seen a very, very nice elevator down, a pretty good correction so far for the S&P 500, okay? I ended up shorting the SPY, and I also ended up shorting Bitcoin as well. To be more specific, I actually ended up shorting IBIT. Okay, this is my trading plan I built. These are just some of the levels that I had here on my chart when I was shorting it. Let's go into why. Okay, so S&P 500. I know in my last video, I know it was a week ago, I know I mentioned that we can potentially hit we can potentially see SPY hit 570, and that's exactly what's happening right now. We're currently trading at 572.71. I didn't have a crystal ball. I only had conviction that I believe that this could potentially happen, and we saw it happen. What started this sell-off? It's simple, right? We broke our trend. We broke our trend. It all started on February 21st. I don't know exactly what happened to it on that day. I don't exactly remember what news came out that day, but overall, the general sentiment of the market has been Trump's tariffs. Tariffs that are being thrown around and slapped on multiple different countries, providing a lot of uncertainty, and investors are not fond of that because tariffs are supply chain shock, right? And if tariffs are going to be a supply chain shock, like how we saw in COVID, when businesses were shutting down, there's not enough supply and there's too much demand for some products and things are kind of all over the place. Think of toilet paper, right? Everyone was buying that toilet paper up, but the supply chain just weren't there. Same thing is happening here, where if we are having tariffs on countless goods and imports in our country, and we're going to get tariff too from countries that are retaliating, then those are going to raise the prices of everything, right? Businesses are going to incur so many more costs, and they're going to pass it down on to the consumer, or they might choose not to pass it on to the consumer. They might choose to take it on themselves. Regardless of the fact, these inflation numbers are going to be reflected in the consumer index, the consumer price index, and also the producer price index moving forward if these tariffs are here to stay. That's where a lot of the uncertainty comes in. Is Trump just rolling the dice and just trying to hold up the sign tariff, do what I say, otherwise I'm going to put a tariff on you, and then he's going to take it off if the other countries comply? Or is this going to be set for quite some time in our economy, and the results are going to produce themselves in 6, 9, 12 months, where we're going to see two words are coming out of the shadows right now: stagflation and recession. Okay? Stagflation is a matter of when inflation increases and when the jobs market weakens. Tariffs have the potential to raise prices, right? Who's going to pay for the tariffs? Us, right? Consumers, when we go to the grocery stores, when we buy furniture, when we buy electronics, it's got to be, for the most part, unless businesses want to bite the bullet. That will raise prices. Also, many expectations among consumers in the US They're expecting higher inflation. That will contribute to even more inflation. If businesses are trying to save money, if they're trying to save costs, they could potentially lay off workers or freeze hiring. Bad signs, right? That produces a weaker jobs market. What does the Fed have to do? Well, they can keep interest rates high or hike them if inflation gets out of control. Or they can lower interest rates if the job market becomes weaker so they can stimulate the economy. But which one are they going to do? What if both happen? That creates a dilemma for the Fed. And that's why there's so much uncertainty and so much kind of fear going on right now because of that potential picture. Now, I know Trump is trying to say that this is for the golden age, right? Where this is a short-term sacrifice for future wealth and prosperity for our country. It can happen too, right? This could be just a short-term blip. So keep that in mind, guys. Going back to here, why did I put on this trade and why did I short the market? We broke this level. Originally, if you guys remember, if you watched some of my previous videos, originally I was semi-bullish as we had kind of a miniature breakout right here with decent volume. That continued to be a blip. It did not work. It completely broke. Therefore, I was no longer bullish. We also have a volatility range. Volatility range right here. What do I mean by volatility range? It's a trend line that this is in a very awkward position, but it's being respected. So we have one touch here, second touch here, and a third touch here, and now we're coming down to the fourth touch here. Okay, it's a volatility range, meaning that things get messy, right? That's pretty much where it's a range where the price action trades in, right? Just like a consolidation phase or just like any channel or any other trend, volatility. It signals increasing volatility. Coming down here, we ended up breaking this trend line and we also ended up breaking the 50-day moving average as well. We ended up breaking the 50-day moving average right below here, and I'll show you the trade that I actually put it on. Let me go to my trade history. Let me go enter in SPY. Okay, SPY here. Let's find my debit spread. So I actually put it on. I put on 2 debit spreads. Okay. Let's see. They are right here. So this one right here, the 600 and the 590 put. I went ahead and bought this first one for a 3.78 debit, and then the 600 and the 590 put debit spread as well. I bought this one for a 4.11 debit. And I ended up selling both of them at 6.82 and 6.28 respectively. 6.28 came first and then 6.82. I was scaling out of my position as the market came down. I got out of both positions on March 4th, and I first entered the position on the 27th of February. So let's go to that. 27th of February was right here. This day right here. I actually ended up getting into the trade off the retest of the 50-day moving average right here. I explicitly remember this. So what happened was on this day, if you see this wick right here, we came up to retest the 50 moving average, and then I saw a very, very abrupt sell-off intraday on smaller time frames. And I told myself, hey, we can reject this 50 moving average. This can be a huge line of resistance right here, and we might just sell off. We might sell off fast and quick. So I added the debit spreads on that day, and then I ended up exiting my trade on the 4th of March, which was this day down here. Okay, volatility is really good for traders. So I got in around 597 and closed my trade. I don't remember exactly what price of the market I closed it at, but it was pretty low. It was definitely like in the 570s area. It was in the 570s area, and that was my target. I closed my trade around 575-ish, right around there. So my target was 570. I was like, hey, you know what? We've seen a huge move, right? The stock market, it takes these elevators down, and that's exactly what happened, and it was a good trade. So shorted that. I also shorted Bitcoin. Okay, so Bitcoin's super interesting. First, I looked at TradingView to see the Bitcoin chart, and I noticed this double top pattern here. Double top, 50-day moving average. We're below the average, and we saw a huge sell-off. Next thing you know, this was on Sunday afternoon. I noticed that the market gapped up tremendously up here to retest the trend line. I was like, how can I trade this? I went over to IBIT, which is the iShares Bitcoin ETF, which has a very, very similar chart. Got into the trade on March 3rd right here. Ended up buying puts right here, just straight puts, out of the money puts. Ended up closing the very next day when we opened up at $46. So I got in when the market was trading at $52, and I got out when we started trading at $46 right at the open the very next day. These moves happen quick, guys. These volatility conditions are not to be played with, especially if you're doing like bull put spreads or anything like that, because you will get destroyed. And don't get me wrong, it hasn't been all, hasn't been all prettiness for me either. I also took some losing trades. I took a bad losing trade on Google. Not a bad losing trade. It was just a bull put spread when I shouldn't have put a bull put spread on. But let's go to IBIT real quick. So IBIT, I ended up, let's see. Okay, so I bought 3 puts on IBIT right here. I bought the 45 strike price. Okay, the 45 strike price puts. I bought one for the 17th of April and then 2 of them for the 16th of May, just in case I needed more time. I didn't know it was going to be a huge flush down. I had no idea that was going to happen. I just thought that we can see some downside momentum when we were retesting the resistance area. Ended up buying the 17th of April at 101, 175, and then 1.79 for the 16th of May, respectively. These are all my prices, and then these are all the fills right here when I exit it. So they were really great trades. They were excellent. They were awesome. They were fantastic. And, it's good opportunity. For anyone trading in these conditions, these conditions provide so much volatility, and volatility is great for traders. Volatility is wonderful. No matter how you trade, I know there's many different styles of trading. It really all just comes down to it. But these are the conditions that I was able to recognize as a trader. A lot of our job is just sitting on our hands, waiting for the opportunity, waiting for the setup to come. And then once it comes, we lock in and we zero in. I've been tired this week. I've been managing a lot of my positions. I've been trying to manage my risk and making sure that if these trades were all to go wrong, that I'm still going to be okay. So they all ended up going well. For the SPY, right, let's take a look at the SPY. So how long is this downtrend going to last? Well, I'll tell you right now, I'm no longer short. Okay, I'm no longer short on the SPY, at least for right now. I do think that we can probably see some bounce moving forward. I know we have the unemployment data coming out for tomorrow. Weekly chart, guys. Weekly chart right here. This is all I'm watching for the weekly chart. We have a huge support level at 565.16. This level is huge. Absolutely huge. You can see right here, resistance. This was during July of last year, and then another resistance touch during August of last year. We finally moved above it, and then we held it as support for 3 weeks back in September and October, and then we retested it as support again. I'll even zoom in a little bit, right? So resistance, resistance, support, and then support again right here in November. Okay, we're coming down to it again, and look where it's at. It's at the bottom of our volatility range. It's at right at the retest of the 50 moving average, right? And now we're coming down to the bottom area of it. So I'm definitely going to be looking for some potential reversal plays here in the stock market. I don't think that we're going to go lower much more. Again, I could be wrong, just like how I could have been wrong about the entire downtrend. I had no idea what was going to happen. I only had conviction. Starting to get conviction that we might see some reversal. I'm going to be ready for tomorrow. If I ever see a retest of 565, you bet my ass is taking on a reversal position with proper risk management, proper execution, proper discipline, proper mindset, and good health overall. I need to make sure that we're healthy for the trade. A lot of things I've been battling lately is euphoria. Today that I made about 15%, the next day I made an additional 5%. I was just like, hey, I'm getting a little high off emotion right now because I hit my yearly goal and it's March. And I recognized that, so I took the day off. I didn't trade anything. I think it was on Wednesday, just yesterday. And I'm coming back to equilibrium, right? That's the most important things. When you take losses, you need to make sure you come back to equilibrium, because losses, they can induce fear, and they can induce resentment, and they can induce very, very low confidence as well. Our job as traders is to build that back up by taking on small size, doing proper analysis, and making sure we're coming to the markets with a healthy pair of eyes, and make sure that we're financially healthy as well. When you take a lot of winning trades, that's when euphoria might start to kick in. You see this happen all the time when traders take on a string of winning trades, or when traders do very, very well in a short amount of time. I am not here to be a boom and buster. I am here to keep my money. And what do I mean by boom and buster? It's when someone makes a lot of money in a short amount of time and they give it all back. That is not what I'm going to do. I am going to remain consistent, and I'm going to continue to execute at the highest level that I possibly can while getting better each and every single day. 5 years ago, I embarked on this journey, and my younger self would be extremely proud of where I am at today. But I need to continue to stay focused because my older self is still looking down on me and still saying, hey, remain solvent because there's so much more that I need to learn. So I thought I'd post this video just as an update. I know I haven't posted. I've been really busy just watching the market and monitoring. I've been more focused on properly trading and executing and meditating. My nights have consisted of just going outside, sitting with my thoughts and just thinking and just focusing about what I can do better and what maybe I was doing wrong too as well. Just, thoughts in life and everything like that. Eating well, working out. I'm going to go to the gym right now as I make this video. But if you guys watch this, I'm really appreciative of it. I really thank you for all the support. I want all of us to be better as a community, as a whole, everyone here. I know that if you are watching this and you are looking to be successful in trading, or maybe if you already are successful in trading, I really wish you a very, very prosperous week during these conditions. Volatility is great for traders. We need to select the right opportunity. I was not trading bear call spreads or bull put spreads during this time. I was trading with long calls and long debit spreads because of the Delta and the Vega. Delta and Vega were the main Greeks that I was trading during this time. Positive Vega will increase my profit potential as implied volatility increases, which is great. I can even put an implied volatility chart right here on my chart right here, implied volatility. Look at that, right? You want to make sure that we have positive Vega in our trades if we are trading the options, if we're trading the Greeks, because IV skyrockets during these waterfalls, right? You can see that right here. IV just, right? That's gonna help a lot. When we see, if we see a decent reversal, I'm going to sell volatility. I'm planning on selling volatility, potentially maybe bull put spreads. I have to be correct on the reversal though, otherwise I'm going to continue to get burned if I have a losing bull put spread. But I'm looking at different strikes for some of these expiration dates, especially the 21st of March. I was looking at the 21st of March for the SPY, and I'll end this video right after this. But I was looking at the 21st expiration in March, and I already started selling. I already put on a position actually. SPY right here. SPY, selling the March 3rd, the 530 put and the 520 put for 15 days away. Look at this, right? Look at the IVs. When IV's high, the premiums go up by a lot. This is at a 10 delta, and I received a pretty decent premium for this $10 wide spread. Sell it for about 170 and then bought it for about 110. I think I'm up like about $14 on the spread so far, so very similar prices. But like the 530 put, are you kidding me? Like someone's gonna buy that? They think the SPY is going to go down to 530 in 2 weeks? Don't get me wrong, anything could happen, right? And that's where my risk management comes into play. But with such high IV, as we can see right here, premiums become elevated. So what happens if we do see a reversal? IV will come down as the market expects, we got a relief rally. Thank goodness, right? If IV comes down, if IV contracts, that will increase my profit potential so much more if I have a negative Vega, which is coming from the credit spread, as well as a positive delta from the credit spread as well. So stay solvent, everyone. I'm wishing you the best moving forward. And let's have a wonderful year together. All right. So thank you for watching. See you in the next one, and take it easy.